Okay, hi guys, welcome to the FX and crypto trading session, Nailing FX. Now, I'm just going to put the disclaimers up there on the screen and then we will crack on with a few sort of reminders and updates for you guys. Then we'll crack on looking at some markets and some trades that we can place. So the disclaimers are in the top left-hand side of the screen. Please read them, even if you need to pause the video to do so. I'm going to take my glasses off, because it gives you an idea of what you can expect from these kind of sessions or these kind of videos. So just to show you different resources where you can go for help on different things. So you will just about see, I think, my email address here, becky@tradective.com. So you can, of course, email me if you have any questions or need guidance or clarification on anything. Please email me. Now, you'll also see here this link, tradewithufos.com/Becky, which will bring you here. Now, from this link, there are different resources. I'll just explain quickly here. You can check out our apps, our courses, and our group coaching. There's also one-on-one coaching, different login areas depending on what you have. Now, in terms of free resources, if you scroll down, you'll see this. We'll be using it today. This is a place where we note all of our trades that we place in our sessions. In this case, if you're on tradewithufos.com/Becky, then these are my trades that I place in the live sessions, and I'll update them and I'll keep an update of what's happening. Breaking even, small losses, small profits. Why is that happening? Why is it break even? Why is it a small loss or a small profit as opposed to a full loss or a full profit? Why do we cancel trades? If we scroll along, you'll see snapshots of these trades and an explanation, some notes. So you can use this place to learn and use this place to follow up on trades that we've already placed in sessions, if you're with me on those sessions, or even if not, just to get an idea of how we manage our trades. You can see that from here. If you scroll down a bit, this is where you've got more information on different apps that we use. You'll notice Auto Climate is free on most platforms, depending on what else you do. And Auto UFOs, again, depends on which platform you use as to how much that costs. Now, if you scroll down again, more information on our platform, and scroll down again, this is a question and answer section, which allows us to essentially help other people to not have to ask the question, if that makes sense, right? So you might find somebody else has already asked the question that you have. Therefore, the answer is already here. Or if not, then you can ask a question here, post it, we'll respond, post the answer here. Everybody learns from this place. So different resources there from that link, which is tradewithufos.com/Becky. Now, another cool resource, which is a recent one that I want to bring your attention to, and you'll see the banner on the bottom going through this, is our newly published Mystery to Mastery Forex Trading book. Now, if you go to, well, this is under tradewithufos.com/books and articles, or you can also go to, I think it says on there, tradewithufos.com/book. Now, from here, you can purchase it through different places, Amazon, Ingram, different places. The ebook is only $3.88, and we go through our entire methodology, how Forex markets work, how to risk manage, what the different components are, step by step. It's all there in that book. So if you are watching this session and you're interested in Forex trading and understanding how we do it, and you want essentially a manual or a guide there, then you can get the book for $3.88, and you've always got that there as reference. You can get the paperback as well. It's a bit more expensive, so up to you what you guys choose to do there. Okay, right, let's crack on and have a look. So we're in a Forex session. So we are using FX Street to help us figure out which currency pairs or which countries might be experiencing high impact news, and therefore which currencies or currency pairs might see greater volatility. Volatility is something that is neither good or bad. It simply exists. And it's up to us as traders to decide what we do with it. So I'll give you this information as to the volatility that we might expect, but it's up to you to choose what you do with that. And I'll give you different options as to what you could do to give you an idea. So we can see that today, and this is in Eastern time, there's some news coming out that might affect the US dollar this afternoon. It's 2 p.m. my time, so this is in five hours from now. will be news that might affect the US dollar. Early hours of the morning, news that might affect the euro. Again, US dollar tomorrow morning as the markets open. Also the Chinese yuan as well towards the evening time of Eastern time. On Friday, we've got in the morning time between 8:30 and 10 or just after 10, a bunch of news that might affect the US dollar. So for this week coming up between now and the end of the week, the US dollar has come up a few times, which suggests if we're going to place trades that we expect to last a few hours to a few days, we might be seeing some extra movement if we place those trades in the US dollar. Following into next week, we've got more on the New Zealand dollar, Aussie dollar, and Chinese yuan. And on Wednesday, we would have early hours of the morning Eastern time news that might affect the pound, then Canadian dollar as US markets open, and Aussie dollar and Chinese yuan towards the end of the day. Now, considering, obviously, most of the time our trades are swing trades, therefore likely to trigger within a few hours to a few days of our entry, let's be more aware of the fact that the US dollar is likely to see volatility based on news articles or news announcements over the next few days. Now, what do we do with that information? One end of the extreme here, and I'll see, sometimes it freezes if I do this, but I'll see if I can do this. One end of the extreme, I'm going to try and find a blank space to do this in. This is reasonably blank. Let's do that here. So one end of the extreme, which is completely risk tolerant, versus over here at completely risk averse. The risk tolerant end of the spectrum, and let's give a different color there. So that's the spectrum here. The risk tolerant end of the spectrum, what that might be is that we completely ignore volatility. We don't care. We place whatever trades we want, as many as we usually would, and we don't even care what the volatility is. That's the extreme of risk tolerant. Risk averse, the extreme there, is to never place trades that have volatility risk. As in, we might completely avoid the US dollar entirely and every other currency that's on that list of news articles. Now, somewhere in the middle might be something like, so we've got a couple of options here. In fact, I will just do that slightly differently. So we've got a couple of options here. One option may be that we place less, in this case, US dollar trades. So instead of placing euro dollar, Aussie dollar, pound dollar, we only place one of those, perhaps the one that has the highest probability rate or the one that has the lowest risk, whatever it is. Or we could place the same amount of trades, but place less risk per trade. So instead of risking 1%, we risk 0.5%. Instead of risking 0.5%, we risk 0.25. Instead of risking 2, we risk 1. So we can reduce the amount of risk on trades that might see volatility. Because if price moves quickly, that can mean that we get stopped out when we shouldn't have. It can mean that we get slipped, so we get out at a worse price than we wanted to. It could also mean that it goes in our favor and we hit our target very quickly, but we don't know. We're taking that risk when we do that. So there are different ways to interpret this information based on where you sit on this spectrum. So like I said, sometimes when I do that, it freezes my screen. So I hope that that didn't freeze too much and we can carry on and this syncs back as we look at different markets. Okay, so we've already talked about what we might do or not do with the US dollar. We're just going to bear that in mind. If I see US dollar opportunities, then I'll give you that as an example for you to take or not, but bear in mind that they might see some volatility. So let's have a quick look at MetaTrader, which we will use to look at US dollar pairs. We are currently on the New Zealand US dollar, so why not take this as our first example? Now, you might, for those of you that have watched our sessions more recently, we have always used TradeStation as a way to scan for opportunity. Unfortunately, TradeStation have discontinued the App Store. So our apps, as well as every other app that was in that store, are essentially being discontinued. So we can no longer use TradeStation as a scanning tool. Now, we will in time have other solutions. In fact, we already kind of do have other solutions. And hopefully by the next time I do a session, I'll be able to show you that. For now, we're going to do it more manually and just go through majors now, and then we'll go through minors on TradingView. Okay, so New Zealand US dollar, we have a thick red dot, probability down. By the way, I'm going to assume that you already know the strategy a little bit here, so I'm not going to go into a lot of detail on that. You can watch previous sessions. If you've got our FOREX course for however many dollars, is not very much dollars for that, you can watch that and get all of that information. You can buy the book for $3.88, which you actually get free access to the course from that as well, and have that as a reference. Or you can watch previous sessions for free. Different ways you can get that strategy. I'm going to assume that you know it. So thick red dot, probability down, looking to sell. We normally go down for 5 candles. We're on the 4th, so we are still within what would be a usual movement. The EMA is 0.5638. So we're going to try and find a red UFO in that area on the right-hand side for our 1 hourly chart. Now, if you're not using MetaTrader, you might look at a 55-minute chart. I'm going to look at between a 30-minute and a 4-hour on the right-hand side, see if we find a coinciding UFO. If we don't, we'll move on to a different opportunity. So currently not having anything line up because, again, the EMA is 0.5638, so nothing in there. Definitely not on the 4-hour. And 5638. Brilliant. We do have a couple of UFOs here that are showing us probability, or showing us that we are coinciding with the EMA. So what I'm going to do now, I'm going to bring in my sheet that I use. It's what I fill in that fills in. Sorry, it's what I fill in that then enters that information into that sheet that we saw at the start. That shows us all of the different trades and what happened and the data for them. So we'll fill this in together so you can see how you might log trades. So today is October 12th. I always find it weird to say the date the other way around than I'm used to. I would say 12th of October, but October 12th. New Zealand US dollar. We're looking at a 1-day, and in this case, 30-minute chart. We're looking at going short. The entry is going to be this number, which is 0.5622. And our stop loss is going to be this bigger number. We'll add a few for wiggle room and for the spread. So it will be 0.56568, round up to 7, plus 2 for the spread, plus 5 for wiggle room. So that's our entry and our stop. Now, before we figure this out, we're also going to look at where our final target will be. Then we'll put our safety target. So the final target, we should be using buyers on the left-hand side, which we do not see. Therefore, our final target will be trailing. So let's put that back into the list here. So it's going to be a trailing final stop. We're now going to finish this on TradingView because it helps me do the maths easier and it's easier to place in my opinion. So we'll come back to TradingView to do that. Okay, so TradingView, New Zealand US dollar. And I'm also going to remove, bearing in mind, so I've just loaded the Oanda feed. If you are using MetaTrader or whatever broker, then if you're looking at TradingView to place the trade, make sure you use the data from where your trade is routing through. Meaning, different brokers will give you different prices. Different platforms that you use may be connected to different brokers. So again, you're going to have slightly different prices. If you are using, and if we look at here, it's currently on paper trading, but if you were to see the brokers list, if you were to be executing your trade through the broker City Index, then use City Index numbers or price data, essentially. If you're using FXCM or Oanda, then use FXCM or Oanda. So in this case, I'm just going to use paper trading because it allows us to put these demonstrations on. I need to go back to that. So back to, oh, it had let me. I was on paper trading, wasn't I? Let's have a look. Paper trading, there it is. Missed it. Okay. So make sure you're using the same data on TradingView as you are for whichever broker you're executing through. Or if you're doing it just for visual purposes, then of course you wouldn't be placing the trade anyway. So let me bring up our data that we've just written in. I'm going to put it over here so we've got more room on the screen and that we can see more what we're doing. Okay. So we are selling entry price of 0.5622. Us again, we're on the wrong. 0.5622. Stop loss of 0.5664. That tells us that if we were to trade one lot or one mini lot, that micro lot, we would be risking $4.20 per lot, or per, again, micro lot. The risk in pips there is 42 pips. So again, it's great for us to get a nice round number and know what we're risking so that we can then figure out our safety target and say, if we're risking 42 pips, then our first target needs to be 42 pips away, which takes us to 0.55. Put that in there, 0.5580. Nice. So I'm going to draw it in, not for any other purpose than to just be visual and be able to see what we're doing here. 0.5622 to 0.5664. Our final target will be trailing. So we won't put a line in for that because it's going to trail price behind UFOs. But the safety target is there. Brilliant. So that's going to be our trade. So I'm going to risk $50 on either side of the trade, again, just for demonstration purposes, just to show that you can choose the dollar amount, pound amount, euro amount that you want to risk. In my case, I put $50 either side because it's a nice round number and it's not something that, make sure your time in force is good till deleted. And again, you would make sure you do the same for both sides. I do $50 because it's a half of 100. It's a nice round number. It's just for demonstration purposes. If you want to risk $4.20 on this, then you have one target and you have one lot. You use one lot. If you want to risk $400, $4,000, $4 million, whatever, it's up to you to choose to do that. And you can tell TradingView exactly what dollar amount you want to risk on each target, right? On each side of the trade. You might have one target. In our case, we have two, $50 each, overall risk of 100. You might have 3, 4, 5 different targets. Okay, so that's now gone in. I'm going to, again, do something visual. Placed on the 12th of October, 2022. T2 is trailing. It's a short. And it used a 1 day, 30 minutes. Nice. So that is our first trade. Now you'll notice, if we go back to, here we are. If we go back here, I've just updated that sheet, as we saw, which if I then update tradewithufos.com/Becky, then it should be, she says, brilliant. We can now see that that's come in. That New Zealand dollar trade that we've just put on has come in. That's now on our screens. Obviously not filled in terms of outcome because it's not happened yet. So we filled in what we can for now. Okay, nice. Let's now carry on and look for a different trade. And we'll be a bit quicker with this one. So New Zealand dollar, I'd ideally not like to do Aussie dollar. It's too correlated, but let's look at the euro dollar. And again, bear in mind, depending on where you are on the spectrum, you might choose normally, regardless of volatility, to not place trades that are correlated. Meaning you wouldn't place a US dollar currency pair trade more than once anyway, regardless of if there's volatility. You might be somebody that says, I won't place more than one if there's volatility. Right? Again, it's up to you to choose. I'm going to give you different examples so that you've got ones to choose from. So euro dollar, thick red dot, probability down. We have usually goes down for 5. It's on 4. Again, it's a dollar pair, so it's going to be very similar to what we, very similar to what we see in other dollar pairs. Our EMA, if we do this, EMA is 0.9759, which is within this UFO on the 30-minute. I'm going to see if there's anything on a bigger time frame. So what was it? It was 0. Move that back down. 9759. So not on the 1 hour and not on the 4 hour, but we do on the 30-minute. Brilliant. Okay, so it'll fit nicely within this UFO. Great. So let's put that in again. Again, I'm just going to keep it over here just for ease. Put in the notes so that I've got it as a reference when we go to TradingView to put it on. 1 day, 30-minute. And we're going short. And like I said, you may choose not to place more than 197. So it would be 965 plus 5 would be 70. So 9770. Nice. We'll figure out the rest from there. Our final target is going to be 9524 plus a couple of cents there. So it will be 0.9526. Nice. Okay, so we've got all the information we need. We'll come back to TradingView. And again, to say, as I was in the middle of saying before I interrupted myself, is that you might choose very fairly that you will not place more than one US dollar trade at the same time. So just because I'm putting on 2 trades does not mean that you would necessarily want to do that. Let me just check that because I just saw a UFO there. So I just want to see based on MetaTrader data. Okay, no, we're good. Alrighty, so let's draw it on. So our entry is 0.9746. Stop loss 0.977T. That's there. Which is this area here, if we can see. Our safety target we'll figure out in a second. And our final target, which we got from the buyers of the previous chart, is down at 0.9526. Great. So we've got nice profit margin there as well if we were to be right. So let's figure out what our safety target will be as well. Again, if you were to risk 1 micro lot, then you're risking $2.40. Oh, $2.40. The risk in pips is 24 pips. Which means the safety target is also 24 pips away, which is at 0.9722. So that's close with my original guess there, 9722. Brilliant. Okay, we're going to make sure that the time in force is GTD, and we're going to risk $50 again as an example. First half goes in. Second half, exactly the same entry, exactly the same stop, exactly the same risk. And profit target, in this case, in the last one, it was a trailing stop, so we didn't do this. In this case, we have a stop, so that's 0.9526, which is what we had here, which is a 9.17 to 1. Would we be right? Now, 9.17 to 1 is on one half of the trade, 1 to 1 is on the other half of the trade. So somewhere in between there, I guess, is 4.5, 5-ish. Averaged overall if we were to be right on both counts in this trade. Again, let's put a little note. So placed 12th of October 2022. A short 1 day, 30 minutes from MetaTrader there. We don't need to put any other information because we've got everything there on the screen. Nice. Okay, so I'm going to move on from dollar pairs just for time's sake. I want to make sure that we're not spending too long looking at currencies that might see extra volatility for those of you that want to avoid it. So let's look at some cross pairs and we'll stay on TradingView to do that. So we've just placed a euro trade as well. So let's try and look at something completely not related to either the dollar or the euro. And we'll look at the pound Aussie as an example. No, I'm doing the pound Aussie. It just came to mind. So we're going to go through it manually and just look through it. So don't worry so much if we don't. Put this back on. Don't worry so much if we're looking through a few. So it looks like there was a trade on here from a while back. Oh, back in December. Okay, great. I just didn't delete that at the time. Okay, so spread this back out. Now, with this one, thick, take that way as well. Thick red dot, probability up. Normally goes up 5 candles. We're on actually 8 if you count the confirmed up climate. So we're too far, I would say, past what we want to be. So let's move on. Let's look at pound yen. Be my bias there that's making me look at the pound, isn't it? But trying not to do that. Just the first one that came to mind. Okay, so price has just crossed the EMA, which means we can't place a trade here because the EMA is our ideal trading price and price has already gone through it. So we would be lacking probabilities here unless we had a UFO immediately where we are right now and price was within it. She says we are. No, we're not. Okay, brilliant. So nothing working there. We'll stick with the pound and we'll look at pound Swiss. We'll go through the pound until we run out and we'll go through another one again. So to show you what you might do manually. Looks like we have a trade here, which is nice. So we have a thick red dot, probability down, usually go down for 7 candles. We're on candle 1. So at the start of that move down, we've also got a bigger chunk of sellers ahead of us here. We've got sellers on this time frame as well. I'm going to look at the 55 minutes, see if it's there. Rather place the 55-minute one if we can. Got room till it gets to the buyers and coincides with the EMA. Everybody's happy. Let's go. Okay, so the entry, if my mouse will allow me, the entry will be 1.1003. The stop loss will be 1.10451, which takes us to 46 plus 2 plus 5. Nice. Okay. That's our entry and stop. Our final target is down here at 1.07337, round up, plus 2. Brilliant. And let's figure out what our 50 target will be. So entry, stop. Again, if you were risking 1 micro lot, then it would be $5.02 there, 50 pips worth of risk. I'm just going to put a log here before I forget. So we've got pound Swiss, again, nothing to do with the euro dollar or the New Zealand dollar, not at all. 1 day, 55-minute, again, this is swing trading. By the way, you might not be a swing trader. You might be somebody who wants to be a day trader, or you might want to position trade or invest or scalp. Although I'm not necessarily using those time frames, the methodology is exactly the same. You just change time frame. You might use a 5-minute on the left-hand side or a monthly on the left-hand side. And again, anything with that range on the right-hand side as well to align more likely with what you want to do. Okay, so right, there you go, 1.0953. 1.0953. Great, so we've got all of that information here. And in this case, we'll risk $50 again. Make sure that's on and sell. And exactly the same, looks like it's just been triggered as well. Exactly the same entry, exactly the same stop, exactly the same risk for our target 2, but our target 2 is down at 1.0. Where was that? 0.7. That's what it was. 0.736, which is a 5.34. Write this down. 1.0736, which is 5.34. Okay, nice. So we'll place that trade. Second half is in. So again, going going to put a little note on there. So placed 12th of October 2022. 1 day, 55 minutes. And we don't need to put anything else because everything else is standard. We've got our 2 targets in. One is a safety target. One is a final target. Looks like we're already in that trade. So we will see. First half is definitely in. Second half, maybe a bit too slow to that, but we will see how this goes. Okay, so we've looked at, now we've placed 3 trades. New Zealand dollar, euro dollar, pound Swiss. So let's now see if we can think of one that's completely nothing to do with any of those. And let's look at the Aussie Canadian. See what we have here. Okay, so the Aussie Canadian, I'm going to avoid for now. Reason for that is because, first of all, usually goes down for 8 candles. We're currently on the 8th. So we've kind of got to the end of where it might usually move down by. I'm still comfortable personally to place those trades, but it's less probability. Equally, the EMA, I would say it's what, 107 pips away from current price. It's a reasonable distance with these time frames. By the time price return to the EMA, we might see a change of climate. So I'm not so confident with this one. So we'll move on. Let's look at Aussie yen. Okay, so kind of similar thing here in that we are just at what would be the usual move to the downside. Again, I'm still personally comfortable to do that. It is less probable. The closer you are to the start of the move, the better. But do things go past what they usually do? Yeah, often, right? We get the average from somewhere in between those things. So I'm still happy to do that. Price is, what, 90 pips away. So let's see if we do have probability there, then we'll look at it. But I don't think 92.63. Yeah, again, I'm 92.63 is the EMA, which is up here in this UFO. So great, we've got the EMA within the UFO. However, price has got to go through 2 sets of sellers before we get there and still meet the EMA, which is likely to have moved based on price responding to these things. So I'm personally going to leave that one. Wouldn't necessarily be wrong, by the way, to place either of those trades that I've just skipped through and place alerts so that by the time price does come to your entry, if it does, you're notified, and then you can look at what the auto climate is saying and where the EMA is. And then you can either cancel it last minute or leave it on if it works. So nothing wrong with that either. So let's now look at Canadian yen. Again, I'm trying to keep away from the currency pairs we've already looked at. Canadian yen, we will not trade on. And the reason for that is because price has crossed the EMA. So when we see this line, it's very small there at the bottom, but when you see on auto climate that the line, I'm going to try and, there you go, that the line is below the dot rather than on top of the dot, that tells us price has crossed the EMA. If price has crossed the EMA and not responded to it, then we've lost our ideal trading price. So we don't want to trade it anymore. So we will leave this one. Now, we've already placed 3 FOREX, spot FOREX currency pair trades. We have looked now at other currency pairs that have nothing to do with the ones we've already placed. You can, of course, it looks like we're in that second half of the pound Swiss that we just put on. You can, of course, continue to look through and have a look at the euro pound and the euro yen and the euro Canadian and the euro Aussie and then the Aussie New Zealand and the New Zealand yen and, whatever. You can look at all of them. I won't for now because this is also a crypto session and I want us to look at some cryptocurrencies as well. And hopefully you've already got the point as to how this might apply to FOREX, and you know what to do to continue to look for those opportunities yourself. Now for cryptos, and indeed for any market, works exactly the same way. You might use similar time frames depending on your style of trader that you are. That's up to you to decide. but you're looking at the left-hand side to find what the auto client is telling you and where the EMA is, and you're using the auto UFOs on the right-hand side to be more specific about your entry and stop, and you'll use the UFO from the left-hand side to find your target. Exactly the same as in any other market. Same applies to cryptos. For me personally, and this isn't true for everybody, of course, when it comes to cryptos, my personal choice is I will not go any lower than a daily chart on the left-hand side, and I would not go any lower than a 30-minute on the right-hand side, personally. Just because extra volatility in cryptocurrencies and wide spreads means that the smaller the time frame and the closer your entry and stop are to each other, you run more of a risk than perhaps tight spreads in Forex of maybe getting stopped out when you should, or slippage and things like that. So my personal choice is to avoid that. Not to say that there aren't people that make really decent money scalping or day trading cryptocurrencies. It's just not what I do. So I'm going to stick to the bigger time frames, and we will look. Let's start with Bitcoin. And again, crypto wise, if I put in Bitcoin US dollar, and again, I'm going to look at all of them against the US dollar. If I put that in, I've got loads of different exchanges I can look at, right? Which means they're all going to have slightly different prices. I'm going to choose Bitstamp because it's right at the top there. But again, choose the one that for you, it looks like we had a trade on from here, a while back. Let's have a look. It was a trade that we are still in, waiting for it to get down here. So we already hit our first target. We probably would have got out actually already at a decent price. So I'm going to use Coinbase, next one down, just for a nice fresh chart. But again, I've picked at random whatever exchange it will be. You pick the one that you're using. You pick the exchange that you have your account in, because that's where you're going to be stopped out or hit target or whatever. Okay, so let's change time frames. Let's look at a weekly chart first. We'll look at Bitcoin, and then we'll go down to a daily chart if we don't have any opportunity here. And then we'll look through different cryptos. Now, by the way, those of you that are with me live, and I know most people watch these recorded, those of you that are with me live, or if you want to join me live in future, by all means, type in the chat box, can you look at X cryptocurrency or spot Forex pair, whatever you want me to look at. If you're watching this recorded and you think, oh, I don't trade Bitcoin, I trade something else, again, email me, post it on the question and answer section. These are the cryptocurrencies I'd like you to go through, and I'll go through that next time. You guide me. You tell me what you need. Alrighty. So sticking with Bitcoin. So we've got a weekly on the left-hand side. We're going to look at 144 on the right-hand side. I'm also going to look at a daily and a 2-day and a 3-day on the right-hand side as well. Bitcoin USD and Coinbase. And again, you would choose your exchange. Alrighty, so thick red dot, probability down. We don't yet have stats. Bitcoin is not old enough yet to have stats on how long it usually goes up or down for. So on a weekly chart, probability down, that's all we can go by. Probability down, EMA is at 20,117. So let's have a look and see if we've got UFOs there. We don't on the 144. I mean, we definitely do on the daily. We've got some on this higher UFO here. Let's check the 2-day. Nothing there. And check the 3-day. Nothing there. So great. With the daily chart on the right-hand side, we have an area here that coincides, if I spread this out a little bit, coincides with our EMA. You can see that blue line is between the black and red line. I'll be more accurate with that in a second. The target price will be 16. I'm going to round this up personally to 16,500. I wouldn't do this with any other market. And although I say that it's pretty much the exact same application of the methodology, and it is, there will be slight differences that we apply to slightly different markets. For me personally, because cryptocurrencies are often, they've got a lot of decimal places, or in the case of Bitcoin, 4 zeros at least before then decimal places. then we've got a situation where we could be really specific to the cent if we want to, but I'm going to round it up to closer numbers. And again, also it's a largely volatile market, so I'd rather give it a bit more space as well. So I'm going up here by an extra $7.08 to the Bitcoin in order to get that final target. But I've just rounded it up to the closest 100. Now, with the entry and stop, again, I'm going to be a little bit more broad here. So you'll see that it starts at 1917.50. You know what? We'll keep that number. Nice round number. Here we've got 2,479. I'm going to round it up to 20,500. Again, I've rounded it up by a little bit more than what we would usually do to the cent or to the decimal place, just to give it a bit more room. So that's our entry and our stop. So let's put that in and we'll find out what our safety target will be as well. So 1917.50 through to 2,500. So the risk if you were to trade one Bitcoin would be 750. Now, in the case of Bitcoin, because it's an expensive coin, I think we originally kind of denominated. So per 100th of a coin would be 7.5, if I've done the maths right on that. So $7.50 per 100th of a coin, if that's the numbers that you use. And again, you're going to choose the level at which you want to get involved in these. So we are going short in this case. So we are on the 12th of October or October 12th. Bitcoin, US dollar, 1 week and 1 day we're looking at. And we're short. Okay, nice. The final target, I'm just going to put that in there as well, is 1,600. 16,500. Now, interestingly, we had a similar trade last time that was cancelled, never quite entered. So hopefully we're close enough to this one to get in. So I'm going to put here risk of $7.5. So for Bitcoin, it shouldn't. Okay, you should be able to trade a lot less than that. So we'll put it in as 750. It wouldn't be. It would be less than that if you wanted it to be, because you can obviously trade point whatever of a Bitcoin. But I can't be bothered to figure out with the settings now and figure that out. So in your own settings or in your own platforms or exchanges, of course, you can trade 0.0001 of a Bitcoin if you wanted. Okay, so the final or safety target, nice easy number, is 19,000. Lovely. So 1/2 in. Again, you would put your time and force right as well, and I won't correct it now, but you guys know to do that. You want to make sure, in my opinion anyway, you want to make sure that you are in control as to when you get in and out of trades. Overall, 4.33 to 1 in that case. Lovely. So that's a Bitcoin trade, and we used a weekly chart for this one. So let's now have a look. I've got a quick list here that we can have a look at. Let's look at Ethereum. Again, I'm looking at popular currencies, cryptocurrencies. Again, you guys will trade all kinds of things. Same application, same theory, same methodology, same apps, same risk management, same principles, exactly the same. Very slight difference in your application, perhaps depending on your risk tolerance, your style of trader, timeframes you use, but more or less the same. Okay, so Ethereum, weekly on the left, probability down. And again, bear in mind, if you're shorting Bitcoin and you're shorting Ethereum and you're shorting Doge and ADA and whatever you're shorting, they are correlated. So they do tend to move together. So again, you might choose one or the other. You might put all of them on. You might put none of them on. It's up to you to choose that based on that information. So thick red dot, probability down. Let's unsquish this a little bit to give us a bit more insight on that. Thick red dot, probability down. We've got our EMA at 1412. So not where we have the UFO here. Let's check the 2-day. Nope. 3-day. Nope. 144. And bear in mind it's at 1412, 1411. We do not have a UFO on the right-hand side that coincides with that. So we move on and we find a different opportunity. Let's look at BNB. USD. Again, I'm looking, we'll take Binance as the first one there. I'm looking at it against the US dollar, but again, same principle against whatever currency you're using. Okay, this one, it'd be nice to get in a trade with this one if we've got an opportunity, because it's also within sellers on the left-hand side as well, which is great, adds extra probability. So it's a non-tradable symbol. So let's see if we can do it like that. If it's a non-tradable symbol, then okay, we'll do it against Tether. Not more or less the same thing, isn't it? So let's have a look. Now that it's a tradable symbol, we've got that opportunity, same kind of numbers. Okay, so the EMA is 279.2, which is just as this UFO finishes. So I wouldn't be comfortable to put that one on because as price moves up, we'll lose that. We've got overlap here, which we have room for. So we could do this area. It's within that lower half of the weekly sellers within a daily chart. So we've got that opportunity there. Let's look at the 2-day and 3-day. The 3-day is very similar. So let's go back down to the 1-day and we'll use the 2 that overlap. That's a little bit more probabilities there. All right. So before I get down to this is a very large profit margin, but let's have a look here at what our target would be. So 47.2, I'm going to round that up. We'll do 47.5. If we are looking here, then our entry, so it starts there at 275.1. Let's round it to 275. Our stop would be 298.2. I'm going to round that to 100. Again, just give myself a little bit more room when it comes to cryptos. So a very far profit margin. It would be amazing if we could get that amount of profit margin out of our trades, that amount of risk to reward or reward to risk out of our trades. I'll be honest with you, it's not very common. Of course it's not. If large profits were common and regular, the markets would be a very different place and people's experience of it would be a very different place. It's much easier to make a small profit than it is to make a large profit. It happens more often, at least I should say. So we're going to put our target down there because that's what objectively we have to work with right now. But if we get into this trade and we're right, we're more likely to actually just close it out somewhere in between. So we're looking at 25 ticks, 25 pips, minimum price movement there, 25. In this case, I guess it would be $25 or USDT, which same thing. So 272.5 is going to be our safety target. That's not right. I've put the wrong thing in. That's why. Stop loss is 300. Looks a bit small, but I wasn't paying much attention. Brilliant. So it's 250 pips, ticks, whatever, smallest movement. So that is 250 would be the safety target. Brilliant. So again, in this, we might choose to risk $50. If you were going to trade one coin, then it would be 25. If you were going to trade percentages of the coin, which of course you can, per 100th of a coin, then divide 25 by 100, 25 cents per risk there. So I'm going to put that in. So it is the 12th of October. We are looking at BNB, USDT. 1 week on the left and 1 day again on the right. We're going short. Entry of 275, stop loss of 300, safety target of 250, final target at 47.5, which would be amazing to reach. I would be very happy with that. Okay, so let's assume again that you want to risk $50 and be specific on that. Great. So in this case, you would be shorting 2 coins. 275 entry, same stop loss. Risk is the same of whatever it is that you've chosen to risk. And the profit target, 9.1 away. Again, be great if we reach that. Let's put a little note on. So placed 12th of October 2022, 1 week, 1 day. Lovely. We've got time to look at a couple more opportunities, so let's take a quick look. Let's have a look at XRP. I'm going to see if it becomes a tradable symbol, then we'll do it against the US dollar. Again, you don't have to. You can do whatever you want, but similar principles. Okay, so with this one on a weekly chart, we have probability up, right? We have a thick blue dot, probability upwards. So we'll be looking to buy. We've got, I would say the EMA is quite far away. Maybe not too far. Excuse me, I'm going to have a cold. I'm just going to go into a coughing fit. I'll be with you in 2 seconds. Oh, that was fun. Right, so XRP, thick blue dot, probability up. It looks reasonably far from the EMA, but it's not actually that far. 0.46, sorry, 4364. If we draw a line just to make that a little bit easier to see, and we can see if we've got opportunity. 4364 is where we have our EMA, which is actually just on top of this, which actually could work out quite nicely. But let's have a look. Oh, 4364. 4364. Yeah, okay. I was surprised as to why. Oh no, it is aligning. It's just visually weird. Okay, so as price moves down, so too will the EMA. It's likely to coincide in here. So great, but let's have a look at other timeframes, see if we've got a better opportunity. In the 144, the EMA is nicely inside the UFO, but it's a much smaller area. So I'd prefer to take the bigger area personally. On a 2-day, same thing, it's just above a UFO. And again, this one's quite a wide area. 3-day, same thing, just above it. So let's go back to the 1 day, because it's a reasonably wide area, but not too wide. If we think about it, and again, it's up to you to choose this. We've got an opportunity on each one of those time frames. Now, a couple of things you could do. You could look at this on, I think NinjaTrader has it, but you'll check this with a NinjaTrader or top to see what the probability rate is per time frame and pick the highest. Or you could think about it like this. The 144 minute is a smaller risk between our entry and stop. So smaller risk in terms of pips, right? In terms of smallest movement. And so to reach our safety target is easier because it's 1-to-1. So it's going to be easier to hit profit there, but it's also easier to get stopped out. Balance it out. If we have a wider entry and stop, then it's harder to reach our safety target, harder to reach a profit. Price has got to go further in our favor for us to win. But it's also harder to lose because price has got to go further against us for us to lose. So again, balances it out. I'm picking the one that's in the middle to try and be nice and agnostic about it. So let's pick this area. And this will be the last trade we place today. So the entry will be 0.4, that's 335. I'm going to go 0.4340. Can give myself a little bit of room. Stop loss 0.3805. I'm going to round it to 0.38. So again, nice round numbers. That's what I prefer to do when I trade cryptos. Our final target will be, again, this is 0.6808. I'm going to go to 0.68. Give myself a bit more room. Okay, let me place this in my notes section. So we've got this here. So we are looking at XRP. So 10, 12, 22. XRP USD, 1 week and 1 day again. Just happens to be what we're looking at today. In this case, we are going long. So we are not necessarily doubling up on our risk here. We're not taking a correlated trade. 0.4335 through to 0.3800. Sorry, it was 0.434 through to 0.038. which if you were risking 1/100th of a coin, then you would be risking 0.00054 cents. So we're going to assume, and I will insert a column here and I will assume that in the more pricey coins, we risk 1/100th of a coin. And in this case, we will just risk per one coin. And we'll sort that out. So you're risking 0.054 cents in this case. Let's have a look. So we'll put this in 0.434 to 0.38. So again, per one coin, you're risking 5 cents, or you're actually risking 5 cents and 5.4 cents. But let's assume again, like the rest of our examples, that it's $50 worth of risk you want to put in. Stop loss already in there. So our safety target is going to be 0.48848. There it is. It's already done on there. And our final target was 0.6. Lovely. Okay, time in force. Put that in. Lovely jubbly. Let's put the second half of the trade in. 0.434. 0.38. Same thing. Same risk. Target in this case would be 0.68. Lovely, which is a 4.56 to 1. Now again, overall, you'd average somewhere in between. So that's the last trade of the day that we'll place, and we'll put a little note. So placed 12th of October 2022, 1 week, 1 day. Okay, so some of these trades are not necessarily at our entry price. We did have, let's have a look, see where we're at with this, with our currency trade. We had a pound Swiss trade that triggered. Let's have a look, see where we're at. So we did, in this case, 1 day and 55 minutes. Again, that's why I write it on the screen so we can see. We are currently at a $1.80 profit with that one, so we will see. So the trades that have either already triggered or are very close to being triggered, you're unlikely to cancel that trade before it enters, because it's unlikely that something's going to change between now and the time it triggers. For those that are further away from the entry price, check in on them more regularly to see, has the climate changed? If the climate changes, cancel the trade. Don't ever get into it. If you're in the trade and the climate changes, get out of that for either a small loss or a small profit. And again, that's a more conservative thing to do, but it tends to give us greater probability against losing. You could just leave them if you want. You could do that too. That's more of a risk tolerant thing to do. Definitely easier. And of course, you might be exposing yourself to greater profits if you don't interfere. Pros and cons to each. But the way I update the log is assuming that if any time that the auto climate changes, we cancel the trade either before we get into it, or we close the trade at market at that point in time for a loss or a profit, whatever we're at. I'm also assuming that if the EMA moves and is no longer enveloped by the UFO before it enters, as it enters, then I cancel the trade. Once you've entered the trade, it doesn't matter if the EMA no longer lines up. But before the trade enters, the EMA needs to coincide with the UFO. If it doesn't, I cancel the trade. So those are the rules that I'm using to update the system, to update the tracker, and you can track those and keep up with them there. If you have any questions, email me, becky@tradewithufos.com. You also got different resources from here, tradewithufos.com/Becky, one-on-one coaching that you can book, group coaching you can check out, apps and courses you can check out, all very reasonably priced in my opinion, different login areas depending on what you need, free resources when it comes to tracking the trades that we place and learning from the application of our trade management here. And by scrolling down, question and answer section to either learn from or add to. And you always got our book as well, $3.88 for the ebook, starts there. And you get all of the methodology that we've just used on all of those trades is in that book. Explanations on how the currency markets work, how the Forex trades or how the Forex markets work, risk management, all of that, all in that book, $3.88. And if you get the book, you also get free access to our Forex course as well. So it works out being quite a bargain. Alrighty, so I will see you guys soon. Let me know if you need any help, and take care. Bye-bye.